Peak Wealth Management proudly presents Finding True Wealth with certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat. Nick and Jim believe by making simple, good financial decisions, you can retire with confidence. And now, let's turn it over to your hosts, Nick and Jim.
Welcome everyone to the, what is the name?
Trust the Plan.
Yeah, Trust the Plan podcast. I actually couldn't remember it for a second. So obviously we believe by providing education and guidance, we can help you build a plan that you can trust and retire confidently, right?
There you go.
So happy Halloween, everyone. Probably won't be seeing this on Halloween, but today's Halloween. We just want to recap, the Michigan State game from last weekend, because when you tune into a retirement planning podcast, you expect, you're interested in what we have to think about football.
Yeah,
right?
you gotta be ready for some football commentary.
So you might not be here for football, but feel free to fast forward, I guess. Or if you're a Michigan State fan, you might want to fast forward, right? So, hey, I gotta say, I've been watching replays of the last few years all week, okay? Mm-hmm. And what I didn't realize is that in 2019, Michigan won like 44-10. And I had no memory of that because I, was just thinking about the last two losses, right? The 2020 loss, which was just a shock, but our team was bad.
Yeah,
It was a bad team.
It was a bad team.
I blame the coaches for that, though.
Yeah.
Honestly. The players were good.
Right.
As evidenced by 2019 and 2021.
Yeah, they just couldn't do anything with them, I guess.
Yeah, I mean, you get a free pass, I guess, for 2020. But that Michigan State game, let me just set it up. So Mel Tucker's first game, they play Rutgers, and they lose at home to Rutgers, and they had like 6 turnovers, and they couldn't do anything.
Right.
And they looked bad. And Michigan looked great with Joe Milton at the helm.
Oh, yeah.
At Minnesota. They won easily. And so the spread from Vegas coming into the game was like 23, okay? And we lost.
Yeah.
I mean, we were awful.
That's crazy. I'm never comfortable with a big spread in that game, but yeah, I wouldn't have expected that kind of loss, though.
Right. And then last year, both teams undefeated, top 10 matchup. How awesome was that?
Yeah, that was good.
We're up by like 15, I believe it was, 14 or 15, midway through the third. And then K9 has 5 touchdowns.
They just unleashed them.
Yeah. And all of a sudden, we lose, right?
Yeah.
Even Cade had like 390 yards, which was his best game of the year, and we still lose.
Right. Turnovers went against us, all that kind of stuff.
And Aiden Hutchinson had that touchdown taken away. With a strip sack and fumble in the end zones.
Right.
So that would, a 4-point game, right?
Yeah.
Like that plays a factor. And so this year, the spread is like 23 again.
Yeah.
I'm like, wow. Like I thought Vegas would have learned, but they won by what, 22?
22.
With a lot of field goals.
Yeah.
So I'm gonna shout out to my brother here, okay? So he's a Spartan fan. One of the rabid ones.
Yeah.
With no logic with their arguments. Sorry, Mark. But he's like, yeah, our defense played great. We held you guys to 5 field goals. Like, I mean, that was 15 points worth of field goals versus your 7 points.
Right.
So I'm not sure what your point is, right?
Didn't it just feel like the coaching staff was just being super conservative and let's just get this win and move on?
Yeah, look at the downfield passing.
Yeah,
there's very little.
There wasn't any. They just weren't. It was no aggressive play calling. It was just let's give it to Corum and let him.
And so what's really interesting about that is that Michigan State's pass defense is the worst in the Big Ten.
I know.
So you'd think, we're just going to air raid these guys.
Expected them to pick them apart. Yeah.
And Harbaugh's like, no, we're just going to pound them, right?
Yeah.
And we had 275 yards rushing, which is good.
They were successful for sure.
Yeah. Yeah, and so you would have liked to see less field goals for sure.
Yeah.
And then there's the trouble with the snap.
Yeah.
So I was at the game, and I was
funny.
immediately, trouble with the snap, right?
Yeah.
And people around me were all about that. And then I rewatched it, and sure enough, it's Sean McDougal or
same
something.
guy. Yeah.
Same dude.
Same
and he
guy.
says trouble with the snap. And I was watching it last night actually, and I had to pause it and laugh and rewatch it.
Yeah.
Because that brought back so many emotions, and to have it replayed the other way in a it wasn't really a play of the game,
Yeah.
But my brother, once again, he's like, you only had one real touchdown, like because the trouble with the snap touchdown didn't count.
Yeah.
I'm like, well, did you really win in 2015?
Yeah, if they don't count, if trouble with the snap plays don't count, then yeah.
Yeah, we acknowledge them, but we just push them away, brush them aside. So also the thing that happened that was really disappointing with that game was the fight afterwards in the tunnel, and there's two guys that got basically assaulted. And this comes off the heels of the Golden State Warriors assault, Michigan State v. Michigan, and you just got to wonder, like, when's it going to stop, right?
Yeah, it was not a good scene. It was not a good look, and
yeah,
I mean, there's obviously a lot more details we'll probably start hearing over the next few days, but first take on it was not good.
That's right. All right, so we're setting up for undefeated Michigan at undefeated Ohio State. Going to be exciting.
That will be.
So, any other Michigan thoughts?
No, I just don't look past anybody. Let's just get to that Ohio State game.
Yeah.
With no losses.
Absolutely. All right, so today's topic is going to be no lazy money. We've used that headline before with different topics, but I think it really applies today because we see so many people with large bank balances, hundreds of thousands of dollars in the bank, $250 in this bank, $250 in that bank, right? And why? Because they want to keep money safe. I get it. But we want to earn on that safe money, right? That money can't be lazy. It can't be like laying on the couch, letting Netflix wash over you all day long while you're at work. Right? That's not cool. The money has to work. So no lazy money. So what am I talking about with these bank rates? Like 0%, 0.01%, 0.05%. Does that sound good to you?
No, not anymore. It used to be, obviously coming into this period that we've just gone through, the markets has been bad, economy's unsure, everybody's in a little state of unrest, right? So like you said, I don't fault people for wanting to keep some cash on the side, but the real problem is that banks are just not paying money anymore. The banks are so slow to raise their rates that we just can't leave it there doing nothing.
Okay, so the solution is we just can't leave it there. So what do we think about? So I talk with people about their bank rates. I look at what my credit union's offering. You can go on to different local banks and see. You can go to different online banks and see what they're paying. So the local banks, pretty uncompetitive. Uncompetitive? Yes.
Non-competitive.
Non-competitive?
Yeah.
We'll go with it. Online banks. So we're seeing like 2.25. I've seen one at 2.5. Right? That's pretty good.
Yeah.
Right? But money markets, I think, and this is not a recommendation, okay, are a very good way to be not lazy. We'll say that. Okay. So what are we seeing? What is a money market? How does it work? What are the rates?
Yeah, I mean, a money market is basically a short-term investment through a mutual fund company that's designed to protect the principal, right? So it acts like a savings account. No, we don't have the volatility that we get with bond funds, but they'll pay. They're paying rates approaching 3%. We've seen them starting to approach that 3% mark on a money market. So, which is great because, like I said, there's no volatility, right? We saw some of our short-term bond funds, our ultra-short bond funds that when we were craving yield and it was nowhere to be found, we would dip into that a little bit and we would see swings of a couple percent here and there, and that's not the case for money markets.
Right, so they are stable, right? Think of it like a stable value mutual fund that's invested in short-term instruments, government treasuries, like a week or two.
Right.
So
Very
we're collecting
short-term,
that interest, and for many years those rates have been at zero as well, just like a bank.
Right.
But now, finally, since the Fed has been raising rates, we have a competitive advantage with money markets compared to savings accounts or your high yield checking or high yield savings or whatever they're calling it. So we want you to be aware of that, okay? So this is something where we can help you. We can have a conversation with you and give you probably a better rate than you're accustomed to having with your local bank. In addition, beyond money markets, CDs, okay?
Yeah.
So again,
That's a good point.
if you're willing to lock your money up for 6 months, 12 months, or longer, your CD can pay well over 4%, relative to like a closer to 3% money market. Okay, so CDs are very interesting right now. So you could build a CD ladder, like have some money market, have a 6-month CD, a 9-month, 12-month, 15-month, 24-month, all these different CDs. And the idea is that every 3 months or every 6 months when the CD is coming due, then you buy a new longer dated CD and get, ideally, you're locking it up for longer to get a higher rate. And that is the case right now, okay? But we have to also think ahead. So the Fed's been raising, probably they stop raising soon, and then there's gonna be a point in the future when they start cutting rates again, and then these short-term rates, they could go away again.
Yeah.
Okay, so if we're in a position where that's starting to be the case, that's when someone who craves a guaranteed yield might want to lock in a longer rate. So right now, we don't know what that looks like, but you've been rewarded for waiting to lock it in up until this point. Okay, but what happens on Wednesday when the Fed raises rates again? Those money markets gonna
we'll likely see a jump again.
Yeah. So maybe we'll be pushing 3.5 on money markets next week.
Right.
That's speculation.
Right.
You got to be compliance aware, right?
Right. It is. And so many times though, everybody thinks of the negative effects that raising interest rates has, and they do
That's
have
a whole
lot
other
of
episode, Jim.
negative effects. But the positive is just what we're talking about today, right? Is that short-term investments, money market rates, CDs, there's money to be earned. So we need to make sure we're doing it.
Savers can finally now be rewarded. Not necessarily investors, they've been punished.
Right.
Okay, and borrowers have been punished if you're looking for new funding, whether it's a mortgage or other loans. Those rates are certainly different, but the savers are rewarded.
Yeah.
So if you'd like to learn more about how you can have no lazy money, we'd be happy to speak with you. You can set up an appointment online at peakwm.com. Thanks.
You've been listening to certified financial planner Nick Hopwood and accredited investment fiduciary Jim Pilat on the Finding True Wealth podcast, sponsored by Peak Wealth Management. You can learn more about Peak Wealth Management by visiting peakwm.com or follow on Twitter at nhopwood1.